SA 570 Going Concern. There are three steps in SA 570. Step number one, events or condition may cast significant doubt over going concern. Few examples of events or conditions that individually or collectively may cast significant doubt about the going concern assumption. First one, financial related. Substantial operating losses or deterioration in value of assets used to generate cash flow, negative operating cash flow. Arrears are discontinuance of dividends, negative liability or net current liability position, adverse key financial ratios. Next, borrower related points, inability to comply terms of loans and agreements, fixed term borrowing approaching maturity without realistic prospects of renewal or repayment, excessive reliance on short term borrowings to finance long term assets, inability to obtain financing for essential new product development or other essential investments. Creditors related points, inability to pay creditors on due dates, indications of withdrawal of financial support by creditors, changing terms from credit to cash. Operating related regarding management intention to liquidate the entity or cease operations, loss of key management without replacement. Employee related labor difficulties, raw materials, shortage of important supplies, loss of principal suppliers, production serious breakdown, sales related loss of major market, key customers, franchise, license, or emergence of a highly successful competitor. Others, catastrophe, uninsured or underinsured catastrophes when they occur, law related, non compliance with capital or other statutory requirements, adverse change in law or government policy or regulations, pending legal or regulatory proceedings against the entity that may, if successful, result in claims that entity is unlikely to be able to satisfy. These are the examples of events or conditions that individually or collectively may cast significant doubt about the going concern assumption. Next, step number two, additional audit procedures when events or conditions are identified. If events or conditions identified that may cast significant doubt on the entity's ability to continue as a going concern, auditor shall obtain sufficient and appropriate audit evidence to determine whether or not a material uncertainty exists through performing additional audit procedures, including consideration of mitigating factors. Compulsory audit procedures, management's assessment. Management's assessment, if not prepared at, then requesting management to make it assessment. Management's plan, evaluating management's plan for future actions in relation to going concern assessment, whether outcome of such plan is likely to improve the situation. Cash flow forecast, where entity has prepared the cash flow forecast. Analysis of the forecast is a significant factor in considering the future outcomes of events or conditions in evaluating management's plans for future actions. Evaluate reliability of underlying data generated. Determine whether adequate support for assumption underlying the forecast. Additional information. Consider whether any additional facts or information have become available since the date on which management made its assessment. Written representations. Request written representation from the management and those charged with the governance regarding plan for future actions and its feasibility. Optional if required. Management and third party plan in sequence of power. Inquiring of entities legal counsel regarding existence of litigation and claims and reasonableness of management assessments of outcome and the estimate of their financial implications. Obtain and review reports of regulatory actions, reading minutes of shareholders and those charged with governance. Determine adequacy of support for any planned disposal of assets, reading terms of debentures and loan agreements, and determine whether any of the terms and conditions have been breached or not. Evaluate entities' plan to deal with unfilled customer orders, that is, unfulfilled customer orders. Next, cash flow forecast and interim financial statements. analyzing and discussing cash flow, profit, and other relevant forecast with management, analyzing and discussing latest interim financial statements, subsequent event, perform audit procedures regarding subsequent event to identify those that either mitigate or otherwise affect the entity's ability to continue as a going concern, written representation from third parties, confirming the existence, legality, and enforceability of arrangement with related and third parties, and assessing the financial ability of such parties to provide additional funds, confirming the existence, terms, and adequacy of borrowing facilities. Next, step number three, conclusion and reporting. Events or conditions may cast significant doubt over going concern is identified. Part 1. Additional procedures were performed as per SA 570. After collection of sufficient and appropriate evidence, auditors shall first conclude about whether material uncertainty exists or not relating to events or conditions which may cast significant doubt over going concern. Material uncertainty. Material uncertainty exists when the magnitude of its potential impact and likelihood of occurrence is such that, in the auditor's judgment, appropriate disclosure of the nature and the implications of the uncertainty is necessary. Events and conditions and material uncertainty exist. Auditors shall determine whether financial statements adequately disclose principal events and conditions, disclose clearly that there is material uncertainty regarding going concern, and it may not be able to realize assets and discharge liabilities in the normal course of business. Events and conditions exist, and but no material uncertainty exists. In such a case, auditor shall determine whether financial statements adequately disclose principal events and conditions as per requirements of financial reporting framework. Part number 2. After concluding about material uncertainty and its treatment, auditor shall evaluate about going concern and its implications on audit report. If going concern is appropriate, but whether material uncertainty exists. If material uncertainty does not exist, express unmodified opinion. If material uncertainty exists and disclosures are made adequately, then express unmodified opinion. But a separate section, material uncertainty relating to going concern, to be included in the audit report, refer to notes in financial statements, express that they cast significant doubt over going concern, but opinion is not modified. If material uncertainty exists and disclosure is not adequate, then express qualified or adverse opinion as appropriate, and in the basis of para, explain that disclosure was not adequate. Next, if going concern is inappropriate, but management still use going concern assumption as base, then auditor shall give adverse opinion. Going concern is doubtful and management is not willing to extend its assessment, auditor may qualify or give disclaimer as appropriate.